What up, squad? Hope you're all okay. We are coming back with another YouTube video, and we're going to be looking at the best indicator that you can ever possibly use with your trading strategy. I'm going to go through it, and yeah, it's going to be really interesting, really informative. It's going to be the only thing you need as an indicator. So let's get right in this video. Make sure you like, subscribe, and if you're new to the channel, make sure you drop a comment and say you're new. And yeah, check out all the live streams as well we do every single day. So let's get into the video, guys. Peace out. So welcome back to the YouTube channel. I'm so happy to be back on, and I want to kind of go through today what the best indicator you can use in Forex, in my opinion. The best one, which I use day in, day out. You actually use this certain thing all of the time in your day, so it's kind of a play on, but this is the only indicator that I need. And I'm going to go through it and how I use it, and doing a little example of probably GJ right now. To show you how I kind of work it out and why I don't need any other indicators. So yeah, let's just go through it. So the first thing is, what is an indicator? An indicator is something that kind of shows you or gives you confidence of where price may tend to move from certain levels, from certain lines. People use Fibonacci's, people use SMAs, smooth curves, all these kind of things, right? They all use these indicators. You can see them over here on TradingView. They're just all here. So if I do EMA, so moving average exponential, so look over here. This is quite interesting. So we put it on. Great, wicked stuff. And a lot of people like using this, and it makes sense, So what people would be saying on an SMA right now, or moving average, is that we're quite close to the line, which could suggest that we're ranging quite hard. It looks like here we were pretty bearish, which makes sense. It looks over here, because we were above the line, we were quite bullish, which makes sense, However, I'm going to go reasons why I don't like this and why I don't use it at all in certain scenarios, but I'll do that at the end. I just want to go through mine. So the biggest indicator that you have to use in trading, which is the only one you should be using, are your eyes. Okay, it's kind of a play on. It's your eyes. Your eyes can see everything. Okay, so why do I need a tool that can show me something else when I've already got all the data in front of me, which is the candles? The good thing is about trading is that you have all time frames. You've got weekly, you've got daily, you've got 4 hour. You can use as many time frames as you want. The higher, the more powerful, the more stronger the kind of approach will be. And yeah, I want to kind of go through what I go through on a day-to-day basis with this strategy. So let's just start from fresh, okay? Now, if I started on my stream over here, so I do live streams, the first thing I'll look at is the daily time frame, right? So the first thing you can see on the daily time frame is that we are in a bullish structure. You can see, so we came up over here. It looks like it's had a little bit of a relax, but the main kind of the bias on GJ right now is bullish. Okay, and what we came back to? We came back to these highs, which is interesting though. But you can kind of see over here the main structure is bullish. If you're looking from the end of December, we've came up, and we've always been coming up. Okay, especially and we've kept our price above 149. So you can see that overall, in the very, very higher time frames, we are bullish. Okay, so that's quite an interesting thing. And normally, what we see when we have bullish structure is price will relax at some point, and normally it's where we've relaxed before. And what I mean by relax is, I mean it runs out of fuel to push up, and you can see it did this before here, and it's done the same thing again. Okay. Price comes up, and then it's like, oh, it's a bit too high now, we need to relax a bit. Now, what could potentially happen here is price could either continue bullish, make a support. We always know price makes a support, and if it wants to continue, it'll close bullish again, and then continue and expect to exceed the high, then make higher highs and higher lows, and then continue its bullish run. However, if also price wants to reject these highs, what could potentially happen is price could come down over here, retest back to the support where the resistance is, and then continue down just like it did over here. Okay, so this is an interesting section, and this is why this day I didn't really take that many GJ trades, because I could see it was struggling to find a direction. So the first thing obviously here is the daily time frame. So if I started charts, imagine this was the start of the day. This is the end of the day now, but I want to show you what I'd be thinking. The first thing that my eyes are seeing is that the last day, which was Friday before, pushed down all the way to a kind of daily support, which is this area here, and then wicked all the way back up. This to me shows rejection. It shows rejection to the downside, because price had a full day to close strongly bearish, something like this, like that. and it did not. It pulled all the way back up, which suggests to me that it is making some support. And now this day has opened, and we've exceeded the high of the previous and not exceeded the low. We know with bullish structure, we like candles that look like this. So candles that close, and the next one exceeds the high and never exceeds the low. So this always exceeds the high, and this never exceeds the low. Okay, and we can see now we're already starting to get this kind of situation over here where we have exceeded it. We are bullish, but you can see this is a bank holiday as well. You can see there's low volume. You see the length of this daily candle compared to maybe this one and this one is significantly lower. So that was another reason why I didn't trade today. But the first thing I can see today is that the candle near the daily flip over here, it's not too far from it. It's like 10 or 20 pips from it. So we haven't got a strong bias today. So I'd first be like, we could be potentially ranging. Normally when we're close to the daily flip or where the daily opened in this day, it normally suggests that we haven't moved much and that price could potentially range. You guys know by now, if you're my channel, I always put my daily flips on. So when I look in the lower time frames, it's always there. Now, what does the 4 hour show me? The 4 hour shows that it's rejected these highs over here, and now it's coming back to a certain range. So you can see on the 4 hour here, you can start to see that we are potentially sitting in a little bit of a range over here. Tried to break above, but couldn't in this sort of area. Okay. And my eyes can tell me that. I don't need to know any other indicator. We saw before that the moving average over here did. But the issue is if you use the moving average, you may not be using your eyes as much, and you may be trying to be dependent on a certain moving average or indicator. If you are dependent on a moving of an indicator, no matter what indicator it is, it clearly isn't the best situation, because if the indicator was right every single time, or right 80% of the time, everyone in the whole entire world would just do it. Okay, it's clearly not a good system to have in. You can use it as confluence if people enjoy that and they go, oh, we've reacted on this MA or this EMA or whatever. The only issue with that is that you may be dependent to take certain trades when they're actually just in a range, even though it's just tapped your EMA. So let's just go down to the lower time frames for me. So you can see the daily's bullish, the 4 hour is a little bit bullish, but we did reject the highs. Go into the lower time frames now. Now I can start to see certain zones, okay? So I can see the first thing I'm looking at is my eyes. I can see there's resistance here, there's resistance here, okay? I don't need no resistance thing to tell me that. I can see it. I can see prices came on the hourly above over here. It tried to break above, couldn't close, and then closed bearish, and then continued down. So make sure to use your eyes all the time. What am I also doing? I'm looking to the left. I'm always looking to the left to see potential zones where we could reject. But yeah, let's just draw in some certain things here. Let's look at the 30 as well and the 15. So when you have these lower time frames, now you can start to see your certain levels. You can see we are clearly in a range over here. The 4 hour and the daily are very, very close to where price is, showing no volume or no really direction. This is when I'll start to draw in my zones over here. So this is the clear resistance, because one second here, 1, 2, 3, 4 candle wicks came above this certain area but could not close above. Therefore, this is the resistance. Okay. And we saw with that moving average before, it was in the same range. Okay, it was kind of floating down. Now, the issue I have with a moving average or something like this is if you potentially if, let's just say, for example, the moving average tapped here, the 30 SMA or whatever, tapped here, you potentially may go, oh, it's great, it's tapped it now, therefore we're going for a buy. The issue you have over here is you're not using your own confidence and your own kind of eyes to show that you're just in a range. It's not nice volume, you're in a range. The better way to be is if you wait for buys above over here and potentially sells below when you have the daily and the 4 hour with you. So if sells for me, I would look for below here, this level, and it'll be buys above. But this current range here is where people can get trapped. A lot of beginners will try and trade this range unless you get in here when you reject the highs with the 1 hour's closing bearish. That was quite nice, but from this point here on, it can be very, very hard. And you can see over here potentially people who try to take it on the MA over here. So let me just put a moving average on again. Moving average, okay. Oh, that's way too in depth. 1 second, moving average. Okay. Here's an example. Oh, 1 second. Here's an example over here. So let's give me a bit more detail here. But the main kind of thing. Oh yeah, let's just get rid of this one. Okay. The main thing is that if price comes above the moving average, you're going to be looking for buys. And you can see here the structure here is looking nice. You're not exceeding, and the lows of previous is always exceeding the highs, looking good. So if you took a buy over here, with stop loss below the previous. So if you just got it on the SMA, the moving average line, and you put your stop loss here, the issue is that you are depending so much on this indicator, when if you actually just looked at your eyes, you're in a range over here. Don't play in the range. You can see there's clean candles to the left over here. If price comes back up and closes above just like this here, okay, you're going to get a much cleaner trade without much of a range or price, floating around your entry. It's going to be a lot cleaner because there's clean candles to the left and they should come up to a nice zone. If you're trading in certain areas like this, it can be quite hard. So the indicators seem to make people want to get into trades when actually they may not be there, and that is the issue. So always, use your eyes. It makes it a lot quicker, a lot easier to just identify your zones. You can see on the higher time frames where we're going. You can see on the 4 hour here we've rejected a certain level, and we could start to float back down to support. But the biggest indicator that you need is your eyes. Your eyes tell you everything. Okay, so that is the main indicator you need to use, and that is the only one that I ever use. Okay, support and resistance. Use your lines, use your eyes. Sorry, for certain resistance zones, support zones where price is rejected off. And it's funny because a lot of people will go, will be coming up to price over here, and they'll go, "Oh yeah, we're coming towards a certain resistance line on this MA or whatever." And I go, "Yeah, I know, but I know that as well because the candles aren't closing above. There's rejection wicks. It's showing me rejection." And that's where I think most people need to just use what they have, what they've been gifted with, which is their eyes. You can be a much more easier trader as well, because for example, if you've got too many indicators and you have 3 things you're looking at and one's saying buy, one's saying sell, you're going to get confused. Keep your charts clean. Don't make it look like a spaceship because it'll just be confusing. For example, if you do this, just get loads of them. Yeah, let's just whack this on, whack this on, whack this on, and all this stuff. It's going to get a bit confusing, when actually all you need to know is that price is in a range from here to here, this certain level. Sells will be better below here because we've got cleaner traffic, and it's best to wait until we have cleaner traffic. That's all you've got to do. So yeah, guys, I hope that makes sense. But yeah, for sure, maybe people who have been using it, try and just take it off for 1 sec and just look for yourself, because I think it'll help you out a lot. So yeah, if you guys did enjoy this video, make sure to like and subscribe. I'm going to be posting a lot more videos on YouTube. But yeah, guys.